Okay, so we got some follow through on Friday's reversal. You can see here the market did rally above Friday's intraday high. That creates a swing low, and that is the first confirmation that the cycle has bottomed. And I've already gone over this. We're like 50, I think this was 56 days into the daily cycle. That's already a stretched cycle. So the odds were becoming greater and greater that the first swing would complete the cycle bottom. So the next thing I'm going to look at is the McClellan oscillator. And you can see we're getting a strong push higher out of this bottom. That's another pretty good sign that the intermediate cycle has bottomed. We've struck the low. Uh, the, at an intermediate bottom, this should just continue to surge higher, maybe with just small little pullbacks like this, but it should surge higher until we get to uh, anywhere from 40 to 70 before the McClellan oscillator tops, and then we start to kind of ease off into a more natural range that occurs during the middle part of a cycle. So this is another tool that I'm watching. We've got that divergent low. I pointed that out the other day. That almost probably happens at 80% of intermediate bottoms. We'll get a second leg down, and that second leg down is not confirmed by the McClellan oscillator. So we um, constructed that divergence. And now we're getting the second part to the puzzle as the oscillator is starting to rally strongly back up towards zero. Uh, as confirmation that the intermediate cycle low has been struck, we want to see this McClellan oscillator blast through the zero level and go on to, like I said, somewhere between 40 and 70 before it tops. So I'm about 90% confident that we struck our final intermediate cycle low right here. Now this, if you can think logically, this is the most opportune time to buy because your stop is as close as you're going to get it unless you manage to time the exact bottom. But your stop is pretty close. Stops belong below cycle lows. So if we assume this was the cycle low, you can put your stop right here below Friday's intraday low, and you don't have a huge amount of risk at this point. But this, of course, is not the way the most amateur traders think. They trade emotionally, not logically. So when we're in the very early days of a new rally, we're just the fear is still too prevalent in their mind. The memory of this is still too clear. So fear is still the overriding emotion. Logic doesn't come into play, and it's impossible for most traders to buy until they start to feel comfortable. And for most people, that means we're going to have to be up here somewhere, which logically is just a very poor trading strategy because your stop is still down here. So all you've done is you've let a big chunk of the rally unfold, and by the time your emotions give you the all clear to buy, now if we were to trigger a double top and come back down, now you're going to incur a big loss because you've let your stop get too far away by waiting for your emotions to give you the all clear signal. So, if you're capable of taking emotions out of the equation, you can see that now is the time to buy when your stop is close, rather than waiting for your emotions to give you the all clear, which isn't going to occur until we get up in this area somewhere. Now, the next thing I want to go over is I think we have created the conditions for the final parabolic bubble phase of this bull market. And remember, my hypothesis is that all the years of QE are going to create another series of bubbles as opposed to a multi-year bull market that still has another 10 years to run. Now I'm completely ready to admit I am wrong if this rally unfolds differently than what I expect. If the markets starts to rally, but the rally is more benign and much slower, then at that point I would say the opposing theory is correct, and we really are in a multi-decade bull market that still has another 10 years to run before it tops. So we would be kind of similar to this would kind of be similar to 1987. So here's a longer term chart, and there are analysts that are theorizing that we're in this stage of a bull market. Remember, this bull market began in 82. So we had about 5 years, and then we had a very big correction. When you looked at this in real time, this looked very parabolic, like the market was, many people thought that this was the beginning of the next bear market, and in reality, it was just a correction to reset sentiment, and you can see that there was still a lot of bull market ahead of us. And there are several analysts that are in that camp, that we're just maybe halfway through a new secular bull market that still has another 10 years to run. I'm not in that camp, though. I think that all of the QE that's been done over the last 9 years should have consequences, and I think those consequences should be they create another series of bubbles. So rather than me expecting another 10 years of bull market, I think we're going to have a massive bubble phase. So we're going to get this move, but it's going to be condensed into a very quick time frame. So here's why I say I think we have created the conditions for the parabolic phase to switch gears and begin a much more aggressive move. So at this top in January, we started to see a lot of new investors coming into the market, people that have just been on the sidelines ever since 2009. The memory of the Great Recession has just been, it's an extremely damaging event. It's not something that traders can let go of very easily. It's taken 9 years for a lot of people to trust the market again, and I think this very powerful rally in January was probably the trigger event to get a lot of those people off the sidelines and get them coming back to the market. Problem is that they bought right at the top and immediately either saw a big drawdown in their account or they just got knocked out for losses. So my theory is here is that if we are going to transition into a parabolic phase, then this pullback is going to unfold as a slingshot move. So it was very sharp, very sudden. Sentiment went from extremely bullish to extremely negative very quickly. So it got everybody was on the long side of the boat here. So by the time we got here on Friday, everybody had quickly run over to the bearish side of the boat. So we've accomplished in a very short period of time a clearing of sentiment, and if we get the slingshot like I think is going to unfold, and by that I mean we are back up here testing these all-time highs by the Humphrey Hawkins address at the end of the month, that is going to confirm to all of these retail unsophisticated investors that there really is no risk in the stock market, and the people that are suffering a drawdown and held, they're going to be rewarded for holding. The people that sold, they're going to for a loss, are going to very quickly uh, be punished for their impulsive sell down here at the bottom, and they're going to want to make their money back. And if the market comes very quickly back up to test these highs, it's going to confirm to them that there is no risk in the market and that they were foolish to sell their positions down here, and they're going to re-enter the market, and that is what drives a bubble, is a wave of unsophisticated investors hitting very wide bid-ask spreads, panic buying. Um, and if we do slingshot out of this and recover these highs by the end of the month, I'm pretty confident that we are going to unleash that panic buying event that will drive the parabolic phase of the bubble. So we should know in the next week or two whether or not the slingshot is going to develop. One very positive sign is that despite the reversal on Friday and the follow through today, the dumb money confidence level continues to drop lower, and the smart money confidence level continues to get more bullish. So, the emotional, unsophisticated retail traders, people that have no idea what they're doing in the market, continue to get bearish, more bearish, even though the market has clearly printed a reversal with follow through, while the smart money, the banks, the traders that are most likely to have inside information, the professional traders that have been in the market for decades, the people that know how the market works and know what they're doing, those people are getting extremely bullish, while the stupid people, the ones that don't know what they're doing, continue to get more bearish even as the market reverses with follow through.